Zacks Rank Buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zacks Rank Buys. Companies that provide both growth and income. That's what we're going to talk about with Todd Bunton, our growth and income stock strategist at Zacks.com. TELUS Corp, T-E-L-U-S, ticker symbol T-U. It's a Canadian telecom company. That's one that you've brought with you to talk about.
Yeah, they're the second largest telecommunications company based out of Canada, headquartered in Vancouver, British Columbia, actually. Company's got the trifecta of, solid earnings growth, attractive valuation, and they pay a solid dividend, too, that we'll get into. As you can see, analysts have been raising estimates over the last several months. That's really due to their strong growth in wireless revenues. So they also, they have like a wireline, like landline telephones. That's kind of gone away a little bit, but slow decline in revenues. But that's been more than offset by solid growth in the wireless division, and that's because their wireless subscriber base has been growing quarter after quarter. Analysts expect about 14% earnings growth in 2011, 8% growth in 2012. So you're getting solid double-digit earnings growth this year, 8% growth next year. But they also pay a dividend that yields about 4.5%. It's a very solid dividend. They have a history of increasing that. And their payout ratio, which is the amount of dividends divided by your net income, that's at 63%. The company has a target ratio of 55 to 65, so it's well within that. So as long as the company continues to grow earnings, you can expect the dividend to increase as well. And then with valuation, they traded about 13 times forward earnings and a PEG ratio of 0.9. So it's very attractive on multiple fronts here.
Okay. TransAlta Corporation, TAC the ticker, is a wholesale power generator and marketer company.
That's right.
What does that mean?
Well, it's mostly wholesale power generation. They do a little bit of energy trading too, but that's a smaller percentage of revenue. They're about 55% coal, 20% natural gas, and 25% renewable energy like hydro and wind. And that's really been kind of a growth driver for them over the last several quarters.
So they generate the power as well as sell it.
Yeah, that's right. That's right. Yep. Management expects like modest earnings per share growth next year, and that's due to lower natural gas prices. They expect nat gas prices to stay pretty low for the next year or two. But analysts are a little more optimistic. They've been raising estimates over the last 30 days. They expect 17% earnings growth in 2011, 12% growth in 2012, so solid double-digit earnings growth. And they pay a dividend that yields 5.5%, so very solid dividend. Now their payout ratio is 120%, so that's well above their target of 60 to 70%. So don't expect dividend increases in the next couple years, but I wouldn't expect a cut either. They have a solid balance sheet, strong free cash flow generation, and they traded about 19 times forward earnings. That's a premium to the peer group of 14 times, but considering their 17% earnings growth next year, the company seems attractively priced.
No cut is good. We'll take no cut.
That's right, yeah.
Do you own either of these two?
I do not.
All right. Well, if you want to check out more stock pick ideas that we have put up on our website, all you need to do is go to Zacks.com. That's the homepage. And in the upper right-hand corner, we put 4 new stock pick ideas up there for you daily. One in each of the investing categories that we write about on Zacks.com. And then if you click on one of those categories and you go to the most recent article, you can find an archive of some others at the end of the page. With Todd Bunton, I'm Terry Ruffalo.